Hello, friends. Welcome to Logistics of Logistics podcast. My name is Joe Lynch. Thank you so much for joining us today. Today's topic is OneRail's winning strategy for final mile with my friend Bill Catania. How's it going, Bill?
Good, Joe. It's nice to see you again.
Yes, it's been a few years. The last time we talked was during COVID. I just looked it up. So, Bill, please introduce yourself and your company, where you're calling from today.
Yeah, Bill Catania, founder and CEO of OneRail, based in Orlando, Florida. And we are a last mile fulfillment solution. We think of it this way. We give our customers capabilities that Amazon had to spend decades and over $100 billion building, such as the ability to deliver same day from store in as little as 30 minutes. That's what we do.
Very nice. Very nice. So when you say you're delivering, you are not a courier service. The right way to say this, you're an aggregator of all the courier services that are out there. Is that correct way to say it?
So we're first and foremost a tech platform. Our customers use us to decide a lot of times what mode to ship from. So whether to ship parcel or local courier. And then, yes, we've aggregated about 12 million drivers through 1,100 delivery companies. So we're an instant source of capacity. And then we manage all of that capacity with a team in Orlando. They're managing exceptions. So you think about all the exceptions that happen in last mile. That's what makes it messy. And we solve that problem. So think of it as the tech first with the delivery operating system. We call it OmniPoint, backed by a network that has all the capacity you would ever need or want across 400 cities, and then the people to manage it.
Nice, nice. And I've heard people call what you do an orchestration platform. Is that a proper way to call? I know it sounds like a VC word, but it seems appropriate in this case.
We fit within that orchestration quadrant. But earlier this year, we did acquire a company called OrderBot, which is a distributed order management system and inventory management system. So our theory, Joe, is a lot of problems in last mile exist upstream in the order. And so if we could do more to help our customers, not by replacing their OMS, but by becoming a layer that helps their OMS be more efficient around where to source the inventory from, and then couple that with our delivery transportation orchestration and network, we can solve the whole problem, not just part of the problem.
So you bought this OrderBot, and I looked it up. It was in TechCrunch. I'll put a link to the article about OneRail in TechCrunch. I'll make sure I put that in the show notes. But I saw OrderBot. Please explain. You said it's an order management system. By the way, I'll say this for anybody listening. For a minute, 10, 15 years ago, it seemed like the ERP was, that's it. We're good. We got this perfect tool. Then the TMS was out there, but then we got the TMS and it was like, that's it. That's the tool we really needed. But over time we realized, no, we need like dozens of more systems. Some are just what I'll call the killer apps, like the pricing stuff, and the visibility stuff, but we are constantly adding new ones. Please explain, what problem does OrderBot solve?
So OrderBot can be a standalone order management solution. First and foremost, it can, and it does. But I think the bigger problem that OrderBot solves is providing, I call it like an eye in the sky view over multiple OMSs and or multiple inventory management systems, which is very common. There's a lot of retailers and wholesalers that have implemented more than one inventory and order management solutions, or that they've acquired them, right, through acquisition. And what OrderBot's doing, that's why it's called a DOM, or a distributed order management system. It has the ability to have that eagle eye view across the enterprise. So it becomes the system of record where there's multiple installed. And last thing I'll say, if you're executing an omni-channel strategy, again, believe it or not, I know it's 2024, but there's a lot of retailers and wholesalers. If a retailer has 20 stores in a market and maybe they have one DC, they may be running two different inventory and order management systems between store and DC. So what OrderBot does is it consolidates that into one view.
Yep. And I know when we talk about omni-channel, sometimes if I'm selling, I have a certain amount of, if I'm working with Amazon, I can't not fulfill because they'll kick me off their platform. I also need to put stuff on the shelves if I have a store. And I also need to be able to work through all the other Walmart.com and all those. And I think that it's harder than ever to manage your inventory.
Absolutely.
And as much as I talk about transportation on my podcast and logistics, inventory is probably more costly for most customers out there. The carrying costs, and also we make a ton of stuff that never gets sold to the end consumer. And so when some people talk about sustainability, inventory is where we should be looking. Yeah, we'll get the cleaner and greener vehicles, but I've heard figures that 30% of what we make never gets sold to an end consumer. And by the way, you used to walk through an old warehouse, and you're like, none of this is going to sell. Now we're not like that. Now we're looking at the SKUs that get very few sales and saying, why is it even here?
Yeah, totally. And you hit upon another great point, the marketplaces. The marketplaces continue to emerge, TikTok Shop to Shopify to BigCommerce to Walmart to Amazon. So keeping those debits and credits in order, right? Think of it that way. That's really what we do.
And we'll get into more detail in just a minute. But I know, when did you start One? Well, first of all, why don't you tell about the story about how you started OneRail? I think it's very interesting. And what year was it when you ran across this problem that you decided to solve?
Yeah, first idea came in 2015. It was really an idea, and went to work on that, developed a tech connected courier solution, and then reformed at a larger scale in 2018. So 2018 is when we incorporated this business. And we did about 18 months. We focused on being a tech connected courier in multiple cities. And it was September of 2019 that we pivoted to become OneRail. And that's when we realized we need to stop being the courier. There's plenty of couriers out there. There's plenty of capacity out there. There needs to be a solution that aggregates them and essentially matches supply and demand in real time. If you think about what OneRail does, that's what we do. We match demand of our customers, e-com orders, in-store orders, across retailers like Lowe's and Advance Auto Parts, et cetera, Signet Jewelers, which owns Kay's and Jared and Zales. We're aggregating all that volume, and then we're aggregating all the courier supply. And in sub-second timing, we're matching demand to supply in such a way that it's high quality. The algorithm is looking at things like loss runs. It's looking at on-time rates, propensity to cancel an order. That's where the intellectual property is. We're not just matching it. We're matching it at a high fidelity of success.
Yep. And I was hoping you to also tell us while we're here, tell us the refrigerator story.
Yeah, I had no intention of being in this industry. I had sold my previous company, which was called MDOT, and then I sold that to Inmar, and then we sold Inmar. And then about a year after selling Inmar, I'm in a home improvement retailer buying a refrigerator. My refrigerator had died, and I needed to find a refrigerator and have it that day. And they were offering free delivery, which to me, free meant same day, meant that I would get it that day. And
Right.
that did not mean same day to them. It meant 10 days. And they just hadn't operationalized same day delivery whatsoever. There was a couple rider trucks next to the store that they were leasing. Their employees were doing deliveries whenever they could. And as they say, the rest is history. I saw that. I started searching for Uber for delivery from within the store. I couldn't really find anything. And that was the last day of my life that I didn't obsess over this problem.
Yeah. And so initially you started a courier service, realized I'm going to own millions and millions of vehicles before long, if that's the path you took. But instead you decided we will become the orchestration platform for now over 12 million drivers and 1,100 courier businesses. But what's interesting is we say same day, next day now on a regular basis, as if it's just always been that way. I know how thrilled I was when I bought a sweater on Amazon and they said, oh, it'll be a week. And you're like, cool. That's going to be here in 1 week. But now if they say, oh, it'll be 3 days, you're like, 3 days? What the hell? Where are you bringing it from? And so the bar has really gone up. And by the way, I think for a long time, we believe that the Home Depots, the Lowe's, the Menards, that kind of business, they didn't have to live to same day, next day. Wrong. Consumers who get it at Target or on Amazon, The expectation now is it can be done same day, next day. Ship me my damn garbage cans.
Joe, I'll tell you where it's gone is if you look at retail, put yourself right at the cash register of a big box retailer. That transaction that's happening in that moment, or if a shopper's online hitting submit on an order, the requirements telegraph all the way up into wholesale and ultimately manufacturing. Everybody has had or is overhauling their last mile logistics solution to be more nimble, to do it at a lower cost, to get inventory closer to the source of demand. Those are problems that are not exclusive to the retailer, because for them to do a good job, all the requirements have changed upstream, even in the B2B channel.
Yeah. And I think we're going to continue to see change. I would not be surprised. When I was a kid, just when I got my license a long time ago, I remember they built those, yeah, they built those big malls. And we thought we were driven to the future. When you went to that big mall, man, they had music stores and giant cookies and clothes stores. And it was great. Now those are like dinosaurs. It makes no sense when you go. I went through one. I went to the mall of Fairlane. It was like the most profitable mall for Taubman for decades. It's in Dearborn, Michigan. I walked through it. It's depressing. It's like it's 40 years old. They're like, when are you going to shut this thing? But I do believe we're going to see more and more people say, when I go to a store, I want it to be an experience, and when I want it same day, next day, shipped to me, I might pick it out at the store. I've done that with Best Buy, where you're like, yeah, I like this laptop. They go, we'll ship it to your house tomorrow. I love that. And I can see more of that. And same with the clothing. Yeah, I might go in, actually try some stuff on, and they say, we're going to ship this to you. And I think it's going to become more of an experience to be at a store. But when I don't need a garbage can experience. I don't need a new garbage can. I want to order it. I want OneRail to deliver it.
You just want the result. You just want the result. You don't want the drama. You don't want to wonder. You just want the result of what you want, when you want it, how you want it. And yeah, that's how we've been rewired.
So, Bill, I have not talked to you in a few years, and some things have changed. So the one thing that's changed is, I know you've got another Series C. We'll talk about that in a minute. But first, I want to talk to you about your temperature controlled, and you are now delivering food, pharma, that kind of stuff?
We are. We started working with US Foods about a year ago. That relationship continues to expand. And as you can imagine, we had 0 refrigerated and frozen assets in the network. So we have a team that's led by Peter Sear, and we're perpetually growing the network. And when we grow the network, we're thinking about it from a couple different dimensions. One dimension is, where are we delivering? Is it a geography we need to put more assets in? The other is, what kind of delivery are we doing? So we've been dry goods right up until about a year ago. But then with the addition of US Foods, then we had to start recruiting couriers and carriers within the refrigerated and frozen space. So that's something, very aggressive growth plans there. We recently signed our first big pharma deal here in the last month. And again, we wouldn't have been able to do that if we didn't prove that we've done refrigerated and frozen, if we hadn't made significant investments in cybersecurity. Pharma just has a whole different bar.
Right. I was just going to say, food, as soon as you start talking about food, there's the Food Safety Modernization Act, the USDA, and all that. You have some number of your suppliers are now compliant with that?
They are. And that's how we built the network. We, OneRail, don't have to hold that standard. We find carriers that do, and we put our technology around it, our data security layer. But yeah, they're compliant. Just like we would sign a carrier if we do airport deliveries. They have to be TSA certified couriers. We do hazardous materials. They have to be hazmat certified couriers. So yeah, what's happening is the platform, when we get a delivery that's food grade delivery, we're only matching it to carriers that have those certifications. That's the matchmaking. That's part of the matchmaking the platform does in subset.
But the reason a US Foods does business with you as opposed to one of the other courier services is because they want nationwide, they want the technology, they want the exception team. They don't, and so they absolutely value the pickup and delivery. That has to happen. But that is, I won't even say it's not even the easy part, but it's a part. But they can't, I guess they could. They don't want to work with 1,100 different courier businesses. They don't want to have to qualify them. They'll say, nope, we'll let OneRail do all that. We'll work with OneRail and we can focus on our business, let them. And we've seen the same thing in the freight brokerage business. For a long time, there was a little bit of a bias where someone would say, I remember I sold those services. And when you would call somebody, they say, do you have your own trucks? You say, nope, click. And now we're seeing more and more of that business brokered. And the reason we're seeing it brokered is because the freight brokers, the best ones, have invested in technology. They've invested in customer success teams, and they're able to provide a better level of service. And there's very few trucking companies that say, yeah, we're truly national and we can manage anything across the country and Canada. And you guys are the same way. There's I don't know, maybe there is, but there's very few courier services that say we have truly national and Canada coverage.
And it's even more complex in the local courier ecosystem because you have such a variance in the product being delivered from something that weighs, if you take Lowe's Home Improvement, a gallon of paint, all the way up through 20,000 pounds of flooring. So even if there is a national courier network, and let's just assume the gig economy companies are probably setting the standard around national courier service, they're only delivering things that are 50 pounds or less or within 10 miles, right? So what if it's a 22-mile delivery of something that weighs 120 pounds? Think of the complexities of what's being delivered. And that's where OneRail shines, right? The deeper that inventory mix is, the more complexities, the more delivery nodes, we become extremely valuable to our customers but with one plug into us, they have access to this whole ecosystem of localized couriers to get the right type of asset in the right place at the right time.
Yep. I think you said it. It wasn't you. It was someone from your team talked about the tire store that you guys work with. And I don't remember which one it was. I don't think that's important. But if I went to get new tires, a Bell tire, discount tire, it doesn't matter which one. There's probably 40 of those in the Detroit metro area. Do they each one have to carry every tire?
No. And that's another significant advantage of OneRail is that we can source the order. And those are capabilities that we acquired with OrderBot, where we can source the order based on inventory in full within the lowest cost, optimized against the margin. Meaning if there's 20 locations in a market, we can see inventory in full at maybe 11 of those locations. And then we know the transportation rates at all 11 within our network. And we can pick the right store out of those 11 to deliver the lowest cost with inventory in full.
The store wants to carry is, hey, these are the most common tires we sell. We want to carry those. We don't want to carry exotic stuff. We don't want to carry a ton of this stuff. So you might have a central warehouse, or maybe it's just a bigger store that says, we have it, and it's 45 minutes away. So what this basically does is someone can say, oh, it's good to have same day, next day. Yeah, that's true. What's even better than that is being able to say, I can manage my inventory in a way that lets me both serve my customer, because I as a buyer don't want to wait a week for you to get the tires. If I bring my car over to get new tires, I want them today or tomorrow at the latest.
Right.
And so you guys can help me with my inventory. And again, I think us logistics and transportation people sometimes overvalue logistics in comparison to inventory.
Yeah. And or we think we can solve the whole problem just by having a last mile courier. And the reality is you need both.
Yep. You need both. You need both. But again, inventory is a big problem. If you look at I'm from automotive, we're constantly looking at inventory and saying, how can I reduce the inventory? When you hear somebody say just in time for the automotive plants, you guys are basically doing just in time for tire stores.
That's right. And when you think about tires, they're big, they take up a lot of space, and the number of permutations are off the chart, different sizes, different tread types, different qualities. And then on top of that, there's the dimensionality around cost, super premium, standard, economy. So yeah, the permutations are vast. So imagine being like a tire shop trying to have enough tires. You can't. It's impossible. So it becomes dependent on the warehouse offered by the distributors like American Tire Distributors or TBC. That's what we do. We're the link between the warehouse and the tire shop.
Yeah, and I'll get to tell you, anybody who's ever been in a store or a factory has had this difficult conversation. It's old inventory. You're calling it an asset for a while, and then at some point, your accountants say, that isn't going to sell. Call it a loss. Call it what it is. We've been calling it an asset for a long time. At some point, we got to call it, nope, it ain't an asset anymore.
Get it off the balance sheet. Yeah.
So one of the other things I want to talk to you about is you guys just raised a Series C, and you had a nice chart. Maybe you could share your chart with us.
Yeah. Could I do
For
that?
those listening up, yes, please do. For those who are listening to the podcast, you'll have to look at the video to see Bill's pretty chart.
There it is.
There it is. And it's Funding Rounds Explained. This is a chart that says pre-seed, Series A, Series B, and Series C. And why don't you explain what each one of these is briefly? I know I don't have you for very long today.
So with OneRail, I'll take you on the OneRail journey. Our pre-seed funding was exactly $2 million, and it came from angel investors, friends, family. I call that the Shark Tank round. So you're out there peddling really yourself. They're investing in you. They're investing in the idea. At that point, it's really an idea. You've done a little bit of testing. In our case, we did a few $100,000 of revenue as a tech-connected courier under that phase, but you haven't really proven yet you have something that'll scale at all. So then you get your seed financing. Ours was led by Las Olas Venture Capital with participation from Chicago Ventures and Alpine Meridian. We raised about $3.8 million in our seed round, plus the $2 million from pre-seed. So I think it shows 5.8 on Crunchbase. But at that point, we had our first commercial contract with American Tire Distributors. We also were doing some work with Menards. So that was really what we would call our market entry, our first sales as OneRail. And that was about a $5.8 million round. Then our Series A came about a year and a half later. It was led by Iron Spring. And at that point, there needs to be really good product market fit, enough to say this business will scale to become a growth stage company. And at that point, we were doing, I think we might have done $9 million in revenue that year. Iron Spring took a chance on us before we had really proven yet that we could have repeatable SaaS growth with our software product. Most of our revenue at that point was coming from transportation. So we were in the early phases of building out an operationalized sales team, maturing some of the processes in the business. That was a $9 million Series A. It was small given the time period. There was a lot of crazy Series A's in 2021. I'm really grateful that we raised a reasonably sized round, because that really helped us as the markets had a negative impact in 2022 and 2023, as they were negatively impacted by the interest rates. We didn't overraise. We raised the right amount of capital. When you get into Series B, that's a whole different world. And there's a lot of companies that don't make the jump from A to B. There's a lot of companies that either sell and exit at Series A, or they cease to operate, or they become what I call a zombie company. They operate at low growth. We were fortunate. We were growing by hundreds of percents year over year. And our Series B came about a year after our A. And that was a $33 million Series B. It was co-led by Piva and Arsenal Growth Equity and Piva Capital. And at that point, you really have to have demonstrated product market fit. You have to demonstrate that unit economics are favorable. Your unit economics aren't under as much scrutiny in the seed and Series A. They really come under scrutiny in Series B. It's really around where you mature some of the roles in the company, like CFO, CRO. In some cases, you'll hire an EVP of people operations because you're going to do so much hiring. We were fortunate. We grew about 300% from our Series B to our Series C in a 2-year period. And we just raised our Series C. It was a $42 million round led by Alamut Capital. And at that, Series C is like Series B on steroids, right? You more scrutiny. You have to demonstrate you have durability in your customer base.
It's extremely rare to get to Series C. Am I right to say that?
It's 1 in 10,000 from my calculations, or at least the research I've done. But I think what's important to point out, Joe, McKinsey released some data in July that logistics and supply chain tech sector is down 90% in terms of growth equity and venture capital in a 24-month period. So that's pretty big, right? Between 2022 and 2024, it's down 90%. So to not only raise a Series C, but raise it in that period, it says a lot about our team. It says a lot about I think our solution, and it certainly says a lot about our customers and investors. Like, we have a solution that's really generating value, and it's doing it in such a way that there's positive unit economics. We're solving a real problem.
Yep. And I told you this before we hit the record button. I saw some meme that popped up, and I don't know how valid this was, but it says very often you see um, right after getting funding, 18 months later, the CEO's gone, the founder's gone. And that's one of the realities of this, is that as soon as you start taking some of that money, there's expectations, and it either works or it doesn't. And there's no shame. Not every opportunity needs this. Not every opportunity gets this. So I can't start a regular freight brokerage and say, hey, I would like to get VC funding. They're going to say, no, that's not eligible. So well, what kind of businesses or what kind of opportunities are people interested, the VC money actually interested in?
They're exceptionally interested in business that are transformational within their sector, that have a substantial chance of earning a sizable market share, and that also can do that at an economic advantage, right? That can create leverage. They like models like OneRail that create operating leverage within the model itself. You have to check all those boxes. It's not like you can check, hey, it's really cool, people like it, but they can't make money with it. There's very few companies that can get away with that. I think that's what happened in 2021.
We saw a lot of interest from the VCs and the private equity. We saw all sorts of stuff happening during COVID, and it seemed like it died down as interest rates went up and the money got a little less easy. But we've also seen companies like Convoy, and this is no shade for them because what they raised the bar in our industry, but you can see some of the wealthiest people in the world invested in Convoy, and they had a great team. I interviewed them a few times. Wow, they were right on the right track, and it didn't work out the way everybody wanted it to. So there's just no guarantees, but they were also kind of plowing new ground, as you guys are. And I got to say this, the TechCrunch article that I'll put in the show notes talks about how big the market is that you're going after, and just seems like the sky's the limit. There's lots of opportunity to grow for OneRail.
Yeah, there absolutely is. And I have to say, Convoy was a pioneer. There's a lot of negativism around Convoy, but I think you'll find most investors and a lot of tech founders look at them as a company that really pioneered heavy investment in logistics and supply chain tech. Now, I think they were the victim to some degree of a perfect storm with the freight recession and everything else. It's unfortunate what happened, and it caused them to have to change course, and obviously led to the liquidation of the company. But yeah, to get back to your question, I think there's a lot of companies that are driving long-term value. We see this space. There's a funny article in FreightWaves that's old. It's like from 2019, and it says, "What's the size of last mile? 8 billion or 440 billion?" In other words, nobody knows. And I can tell you there's wholesalers out there that are doing north of $1 billion of total spend in last mile. I can assure you the analysts on Wall Street have no idea at all how big last mile is. They have no.
And by the way, that's why you decided to go with venture capital. You had successful businesses. You could have said, I'm going to bootstrap this. But the problem is when you're trying to be a leader in a brand new space, somebody's going to get VC money to be that leader. And because you can't grow over 10 years to become the leader in a new space, you do it over 3 or 4 years like you have.
Yeah, Lisa and I made a very calculated decision. We could have kept doing this. We bootstrapped it for a couple of years. We could have done it the whole way, right? We could have gone the whole way and bootstrapped it, but we couldn't have gone as fast as we needed to. We couldn't have hired up for growth. It's just a choice. As a founder, you have to make a choice. Does it mean something to me to have ultimate total control of my company, but grow slower? Or am I willing to go faster, maybe share some of that control with investors and build something that can win an industry? And I'm here to win an industry. That's why I'm here.
I love it. One last thing. Talk to me about cybersecurity because I know it's a concern for so many companies. And when you're talking about, hey, we work with 1,100 couriers and you also work with a bunch of Fortune 5,000 companies, somebody has got to be the cybersecurity police. I think it's OneRail.
Right. So I learned that with our very first contract with American Tire Distributors, we had to be SOC 2 Type 2 compliant. And I thought, oh my gosh, I never would have thought that this would be the bar we had to achieve. But it was a signal to me early on. It could be a source of competitive advantage. Julius Tubbs is our chief information.
I've interviewed Julius.
Yeah, you have.
I'll put a link in the show notes.
That's right, Julius. So Julius has been our CISO. He's done a phenomenal job. He's chief information security officer. And he's been in that role, has a team of 5 now. We've achieved GDPR compliance. We're PIPEDA compliance in Canada, which is their version of GDPR, ISO. So we just continue to expand those certifications and we provide that layer for our customers. Now, we know a lot of couriers have not made that investment. They're not tech companies. And we need them to do a great job getting things from point A to point B.
Yeah, they should buy new trucks.
Get electric trucks or something. But we are very focused on being that data security layer to the industry.
All right. I know I'm going to lose you. You got another meeting. So I'll wrap this bad boy up by telling us who's the sweet spot for OneRail and what problem are you solving for them?
Yeah, the sweet spot for our customers would be when they need to have exceptional scale, not just a delivery or 2 a day, but potentially tens of thousands of deliveries a day across thousands of stores where there's deep inventory in many locations. The deeper the inventory and the more locations, the bigger problems we can solve to unlock that inventory from their locations and do it in such a way that they can offer new service levels that they never could before, like a 30-minute delivery or same day anytime delivery. So for our customers, it's really more nodes are better, more inventory is better. If a customer has 2 warehouses and they're doing parcel shipping to all 50 states from 2 warehouses, we're not going to solve a problem for them. I would say go work with EasyPost. EasyPost has that figured out. They'll figure that out or stored. So where we come in is where I want to offer same day delivery to my customers, whether it's B2 like a distributor or B2C, a retailer. And I want to do that at 99% on time, complete visibility. I want the customer experience to be owned by me, the retailer, not the courier. That's where our sweet spot is.
Yep. I love that one part you said is owned by you, the retailer, because there's a lot of companies that have popped up that become the business. And I've had groceries delivered to my house. And then I wanted to return the groceries to that grocery store. There was Diet Coke. They brought me caffeine free when my animal. So I took those good Diet Coke back and they said, when you buy these, I said, yesterday. They go, where'd you buy them from? I go, here. No, I didn't buy them from there. I bought them from that company. So all of a sudden, the grocery store that I went to for 20 years now I'm no longer their customer when I buy it. I don't think the retailer is going to put up with that. And OneRail doesn't do that.
Joe, you just hit on really one of the biggest movements we see right now. Marketplaces, first of all, God bless them, right? Without them, they really accelerated this. Companies like Shipt and Instacart and DoorDash and Uber Eats and Grubhub, those companies were pioneers and we needed them to do what they did. But what we find is retailers are now realizing, oh my gosh, I gave my customer away. I don't own the data from the purchases. I can cross-sell, upsell. It's a DoorDash experience, and now that's a DoorDash customer. And our customers are saying, hey, I'm going to keep working with marketplaces, but I'm going to offer Lowe's delivery. I'm going to offer Advanced Auto Parts delivery next to the marketplace.
We're seeing that with Nike, doesn't work with Amazon anymore, nor does the other shoe companies. But it's interesting because I think there was a case study, I think it was hotels.com or something like that, where the experience again is an app and it's no longer the hotel. So I've spent billions of dollars on all these hotels across the country. And now the money's going through them. And basically the new boss is the hotels.com app that you developed for a few $1,000,000.
That's right. I do the same thing. I exclusively use hotels.com. I am not a point snob, although I enjoy the benefits I get from hotels.com. I just want to be in the nicest hotel I can be in at the lowest price. And I am not a customer of Marriott or Hilton, or I'm a customer of hotels.com. I totally get the comparison.
Yeah, yeah. So, getting back to it, I think most successful retailers are going to say, yeah, just because we're delivering to somebody's home, we don't want to lose that experience. And I know you guys aren't necessarily into groceries yet, but I know you'll be there. But you work with a lot of the larger retailers. I'm assuming you work with distributors. Who else do you work with?
Yeah, you pretty much, those are really the big two verticals, is wholesalers and retailers. We also work with product manufacturers like Pepsi. Pepsi's been a customer of ours for years. So I think manufacturers, wholesalers, retailers, just getting into healthcare, which of course fits under the distributor vertical, but healthcare is very specialty. Do a lot of furniture. So yeah, that's the beauty of our network. It's a diverse network. It allows us to really enter any market we want for the most part. And when we get into one that's like temperature controlled, like you brought up earlier, it means that we have to expand that capability set around that type of delivery. But then we can start working with many in that vertical.
And I should also mention, I know you guys, we've talked all about final mile, last mile, whatever you want to call it. I know you also are being asked by a lot of your customers now to do the middle mile, which is taking it from basically to, I think it's generally speaking, bringing it closer to consumers though, right?
That's exactly right. Middle mile has a lot of the same challenges as last mile. And as if you think about inventory moving around and needing to have a more fluid inventory capacity, middle mile becomes really nimble. It also has to become more dynamic with different types of fleet options. So yeah, we are doing middle mile. It's just really a longer version of last mile. It's a lot of the same asset types, notably around Sprinter van and small box trucks. So yeah, we see, and even like Home Delivery World, if you look at Home Delivery World, they're now offering a middle mile show within a show. So middle mile is becoming a hot topic.
Yeah, and it feels like it was necessary. And again, I think as soon as people saw what we were doing on last mile, they said, oh, I could use a little bit of that in my middle mile. Anyway, I'm going to summarize real quick, Bill, then I want your final thoughts. And thank you so much for going over my time with you. Talking to my friend, Bill Catania. We're talking about OneRail's winning strategy for final mile. We've talked about your Series C, and thank you for the education on all the Series A, C, pre-seed through C. And congrats on Series C. Talked about your acquisition of OrderBot, which allows you to, again, be more of assistance with the inventory, which is such the issue. You're now up to 12 million drivers, 1,100 different courier services, and you now do temperature control, which you did not do last time we talked a few years ago. And we also talked a little bit about your cybersecurity focus. Not everybody is getting SOC 2 compliant, but if you're a Fortune 5,000 company, I think they have to work with companies who are SOC 2 compliant. They can't play games. We are seeing everybody get hacked these days. Again, not to be dramatic, we are heading for a cyber 9/11, and the day after, everybody's going to wonder, why wasn't I working with somebody who's SOC 2 compliant? Anyway, Bill put a big old bow on this one. Final thoughts on the topic.
We're just excited about the path ahead. We're in an industry that has almost, as you said, limitless growth potential. For OneRail, what's our path ahead? Fresh funding. We're projecting another year of 100% growth, which is exciting. For us, it's going further upstream in the order. That's really what we're doubling down on. How do we take the problems of inventory and order management, whether it's a partner strategy with IBM Sterling, which we're going to be announcing soon, or whether it's us owning the distributed order management solution, how do we merge that with last mile delivery to solve the real problem, which is high fidelity delivery promise at the right cost that optimizes the inventory decision for the retailer, reduces split orders, reduces out of stocks, makes the customer smile, right? That's what we care about. And then beyond that, we're starting to really get serious about data science. About a year and a half ago, we put David Dashler, our first CTO, in charge of data science and AI. And David's hiring 10 people right now. We're going deep on data science and AI to further optimize delivery to give our customers more savings. And that's really the goal, is to offer an economic advantage to them that they can't get otherwise.
Excellent. Excellent. What I'll do is I'll put a link to your LinkedIn profile, a link to your website, and any of the links Julia gives me. I will put those in the show notes along with the link to the TechCrunch article about your Series C raise. Congrats on all your success, Bill, and Merry Christmas, Happy New Year, or whatever else you're into.
Thank you, Joe. Same to you. Merry Christmas, Happy Holidays, Happy Hanukkah, all of the above. We're grateful for the year we've had, and we're going to take a deep breath and come out working real hard at the beginning of the year.
It's always a pleasure, Bill.
Thank you always. Thank you, Joe.
And thank all of you for listening to my podcast. Your support's very much appreciated. Until next time, onward and upward. You have been listening to the Logistics of Logistics podcast, where we engage with leaders in the logistics and supply chain community. If you like what you hear, please subscribe, hit the like button, and leave us a nice review on Apple or Spotify or wherever else you listen. Also, please check out our videos on YouTube and connect with us on LinkedIn. We're very big on LinkedIn. And you can also reach us on the logisticsoflogistics.com, our website.